Welcome to Power Charting. I am your host, Bruce Fraser, and we have a very special episode of Power Charting today with two special guests. And so we will introduce them in just a minute. Frantz, Herr, John Colucci, and the discussion today is going to be about anatomy of a trade. You're going to want to hear more. But first, very brief announcement on power charting this week is not going to get into the crazy market that we've had today, Thursday. So what I'm going to do over the weekend is I'm updating vertical charts, point and figure charts, because so many of you ask for these updates, and I really appreciate your input and feedback on this. So I don't want to disappoint. So on your daily 5, which is coming on Monday, I'm scheduled for that. And I'm going to do my stock index update with point and figure charts, doing the Wyckoff view of the S&P and the NDX, which is also going to include the QQQ. So do come to that, watch it. You can watch it on demand later on. And then also I will tweet out the link so that it's easy to get at that so that you can watch it at your leisure. So with that, let's get started because we have a lot to do today and just a little bit of time to do it in. So let me introduce our special guests. So Frantz, Herr, and John Colucci are educators, professors at Wyckoff Analytics, and they do a multitude of educational things for Wyckoff Analytics. And you know John as Johni Scan because he does this great work on scanning using the Wyckoff context for developing his scanning tools and sharing them with us, which we're extremely grateful for. So, and then Frantz does a number of things at Wyckoff Analytics. One of them is anatomy of a trade. This incredible resource that they do together is a video series, call it a vlog, and this is free. And it's amazing that this tool, which is very powerful, is a free tool. It's a free video, and we're going to find out more about how they do it right now. Welcome, you guys.
Thank you, Professor. Magnanimous introduction. Really appreciate it.
And Frantz, this is your first time on Power Charting. I hope it's the first of many.
Well, I do too. I hope I'm invited back.
Well, I'm inviting you back right now.
Okay, great.
So, all right. Well, gentlemen, what do you have for us?
Well, we are going to talk about anatomy of a trade today, and that is a Wyckoffian look at student trades. And I'm going to let Frantz tell you a little bit more in depth about that. I'm going to cover just a couple of points on the Wyckoff method itself. This is going to be a big challenge because it's hard to stay contained when discussing Wyckoff analytics, schematics, all these different sorts of things. So in the world of Wyckoff, we have two main concepts: accumulation, distribution. Within the context of accumulation and distribution, I know Professor Bruce could spend hours just on these images alone. What do you think there, Professor?
I'm sitting on my hands and I've got tape on my mouth so that I won't take up too much of your time today.
Well, this is something I know you're passionate about, and so am I, and so is Frantz. These are the accumulation schematics, and these are the archetypal formations that we look for as Wyckoffians on accumulation side. Now there's reaccumulation, which starts out a little bit different, but the key is in any type of accumulation structure, you finish with an exit above resistance. That's a real key factor. And Professor, in 10 words or less, what does it mean when we exit above resistance out of a structure?
Well, the final run-up, which is the testing in phase C and then the run-up to the resistance area in phase D and then out, which we call phase E, we look for changes in the characteristics of the way the price behaves. Price will do some distinctly different characteristics in terms of price and volume, spread, velocity, things of that nature that will occur on the way up, and then also the type of a backing up action that will occur or the pause that will occur at the resistance area. All of these are clues about the intention of what we call the composite operator to take the stock up and out, because in the accumulation area, they have built up the position that they would like to own for the campaign to higher prices, which usually for a CO is a very substantially large position.
Well, I knew that 10 words or less was an unfair challenge. I apologize. Distribution, we're going the other way. So exit below support punctuated by a sign of weakness and then a breakdown. That really is the characteristic of any form of distribution that unites really all phases, all elements of distribution. You have an exit below the structure. And let me show you real quick. If we took and simplified price movement to really an extraordinary degree, accumulation can come in, across, out to the top, reaccumulation up from the bottom, across, out the top. Distribution, on the other hand, up into the structure, structure forms, exits through the bottom, redistribution in from the top, across, out through the bottom. Those are the most simple concepts when we look at structural price movement. And a lot of what I do in the world of Wyckoff is look at structure. How can we find elements of structure using the really wonderful StockCharts scanning engine? In fact, Professor Bruce and I are going to do a scanning special in May that really looks towards efficiency in scanning. In fact, our motto there will be look less, see more. That's going to be a real interesting one coming up. That's through our friends over at Wyckoff Analytics. And here we have the web page for Wyckoff Analytics. There's the web address real quick, but you'll see all kinds of different educational items, lots of free materials, catalogs, on-demand courses, and the market report, which is new and improved. We're going to talk about that a little bit later in the show. Frantz, you're on the hot seat today. Tell the folks at home, what is an anatomy of a trade, and what do we do with that?
Okay, well, thanks for the introduction, John, and Bruce as well. First of all, this is a lifetime adventure for me, learning about the whole Wyckoff approach. It's just extremely interesting, and the end result of this, of course, is to be able to translate this into money-making trades. And there's an entire process that we go through at Wyckoff Analytics to introduce students, first of all, to the overall Wyckoff methodology, and then to translate that into a way to use that methodology for trading success. And one of the ingredients of our process, which is absolutely critical, and I don't think that there's a successful trader anywhere in the world that doesn't actually do this as a part of their own process, is to analyze our trades after they're finished, and to go back and look at the trade, look at what the prompts were that caused us to get into the trade, look at our behavior in the trade, and use that information to better ourselves, to make reflections and observations about the trade. And if we have certain tendencies that through this going back through individual trades and looking at them that we see reoccurring, we can then say, well, is this a good tendency that I want to reinforce, or is it potentially a mistake that I keep making and that's really holding back my performance? And in that case, we can make rules to potentially, if we follow the rules anyway, to overcome that particular tendency in the future, in future trades. So this is an absolutely vital piece of the puzzle for any trader that wants to improve. So what we're going to do is actually look at one of my trades. That's why I'm on the hot seat, and go through how we would analyze this after it's completed. And this is a done trade that was previously put on. And let's just go to the next page and take a look at what we're seeing here.
All righty. Well, let me give some
And of course,
thoughts.
this is extremely powerful because people are able to see through these anatomy of a trade vlogs or videos that you're posting up how an actual Wyckoffian is conducting trades that might be in any one of an accumulation, distribution, uptrend phase of a stock's unfolding pattern structure. And so this is an opportunity to see real live trading with real live Wyckoffians showing how they're doing what they're doing, which is going to include the areas where they are evaluating whether they could have done it better or not, because they want to use this anatomy of a trade to improve future trades.
That is so right, Bruce. Thank you. And thanks for the reminder, actually. And this is a series, Anatomy of a Trade. Some of you may be familiar with it, some of you may not. That right now, John and I are doing on a weekly basis. And what we're actually doing is taking actual trades of students in the Wyckoff Analytics courses, and that they submit with permission for us to analyze, and we go through them exactly the way we're going to do here. And hopefully this is a benefit to everybody, because when you see other people's mistakes, maybe that keeps you from making the same mistake yourself. And on the other hand, if you see somebody doing something good, maybe that will help you in that area as well. So
well, for me, Franz, I think this is going to help cut down the number of times that I repeat the mistake.
Well, let's hope so. Let's hope so.
Bitter experience is a good teacher.
Great. It is for sure, John. To see this series, by the way, you can either go through the Wyckoff Analytics website, or you can go directly to YouTube and just search on Anatomy of a Trade. And you'll see at this point, we've recorded over 100 of these. So you can knock yourself out watching them, and encourage you to go in and check them out. Like I say, once a week. So
an incredibly valuable thing for the Wyckoff community. That's just remarkable. So great work, you guys.
Thanks.
So can I read your mind from this chart, Franz?
Jump right in.
All righty. Well, certainly we recognize the big March 2020 drop. This Apollo Global Management, excellent stock, great company. And look at this climactic bar here, where we have tremendous selling on increased volume. That was quickly followed, these are weekly bars, by the way, by a wide bar, not totally bullish engulfing, but very, very positive in the upswing there. Low volume on this particular bar coming down, and then up to some form of stopping action. Essentially, price ran out of gas there. People were not willing to pay more than these areas of resistance. This type of move sets up a possible range-bound condition, and that is one of the things that we focus on as Wyckoffians, range-bound conditions, because this allows time for the development of cause, and cause is a huge factor in Professor Bruce's analysis. The leading Wyckoffian in P&F analysis, I would say. What do you think, Professor Bruce?
Well, I certainly probably do more of it than anybody. I'll take credit for that.
Well, you're at the top of my list. So,
Okay, well, thank you.
so we see a tremendous rally up and then a horizontal area of price development with a considerable dip below the red dash line, which is the area designated as support. We move into somewhat of an up channel back into the area of horizontal price action, and towards the third yellow line, we see a POE, point of entry. Is that your point of entry, Franz, and what were you thinking about there?
Sure, John. Well, backing up just a second, how does Apollo Global Management get on a list? There are lots of different, you're into scanning. My methodology is a little bit different. So this particular stock had been on my watch list, and that's another part of the process that we follow to have a kind of a target rich environment to be looking at. This stock actually came onto my watch list. I checked it out back in August of 2019, so it wasn't even on this chart. And where this first came on, but it really, after going through the COVID sell-off, there were some other stocks that were more attractive for me anyway. So I was just watching this. It stayed on my watch list for this entire period and looking at how it moves through this trading range after the initial buying climax that you pointed out, John, after the COVID reaction. Notice the volume. Notice how much buying and selling is happening between timestamp about March of 2020 and all the way into probably the middle to late part of June of 2020. And then look what happens. There's this collision of buyers and sellers, and typically what happens after that is a period where there's exhaustion, where buyers and sellers are both kind of done what they're going to do for the time being. And this is this whole period from about July through October, and you can just see a very kind of mediocre sell-off that comes down to resistance, bounces up, and then you get a shakeout move, which occurs on relatively strong volume in October and November. But after that, you have a really a nice recovery back to the initial, which is now resistance that had been support, and then through that, and starting to notice where you see these yellow vertical lines, you start seeing what we refer to as significant bars, where price is moving with some ease. I mean, there's not huge amounts of volume causing this, and that is sort of the footprint of the composite operator that Bruce referred to earlier. Now, in March, you'll notice there are three very, very high levels of selling, very high supply bars. We call them volume spikes. But if you use that period and go back over to where it previously happened, which would have actually been about a year earlier, and notice how much more movement there was, how much bigger the spread was in the price in the 2020 timeframe in March versus here. And that tells you that there's effort, lots of effort, to push price down. And yet, what does it accomplish? Well, it really doesn't accomplish anything. It's not even able to push price back down. These are weekly bars, but it's not able to push price back down to support. And then you get another one of these high spread, widespread bars to the upside. And I made a note to myself at that point, because I really didn't know exactly how to interpret that high amount of volume. And I said, well, maybe that's supply, and maybe it's already been absorbed here within the range, which means that we should be able to move up and out of the range with some ease of movement. So that was the kind of the rationale for my entry. And I got into this with a $48 roughly price, a little bit over that, on that bar as it overcame the kind of the last, we would call that an LPS, last point of support, as it overcame the sort of the highs of that little channel and started to move up and out. So that was the rationale behind this. I've been watching the stock for a long time, and finally it gave me the trigger to get in. So we can follow into the next chart and see what happens next, if you like, John.
Absolutely. Let's be real effective with the last 2-3 minutes we have.
Okay.
Here we have your point of entry, and what a wonderful run up into almost at the two-bagger, I'd say. You came in around the 40 mark, and you're all the way up to 80. You hung on a little bit. You came out about 68.35. What was your thinking on the exit, Frantz?
Well, if you notice, the last vertical yellow bar has a much higher spread than any of the previous ones that are highlighted, and also a higher volume spike. And what that's telling us is, okay, sure, there's demand pushing price up, but there's also, there's got to be the other side of every trade. So there's sellers that are also coming in and absorbing this demand, and it's occurring right at the sort of what we call the supply line, that the upper blue channel line here. And after that, price is unable to follow through to the upside. And in fact, volume stays fairly high, and price comes back down, tests the low of this significant bar, with the last one with the vertical yellow line, attempts to recover, and then comes back down again and actually starts to take out the actually close below the supply line. So at that point, my original intention for this was to continue to hold it if it continued to move up, but I saw that break of the demand line of this up channel, and I decided, well, it's time to say goodbye. So it wasn't the best exit in hindsight, but and it was also above my stop loss. So I took a little bit of discretion. You can see where my stop loss was placed, actually below the low of that significant bar. But that was kind of the exit and the say goodbye to the trade.
Well, we've got about a minute and a half to cover some of the analytics, the post analytics, the bias. Did we have the direction of the trade correct? The timing, yes, you were right on. Character of the move, you had a double on that one. Point of entry, good. You did have a stop loss, it is present, and it's far enough off that it's not likely going to be hit, but it's there in case of catastrophe. No add-ons here, Frantz, and the exit may be a half because it was a little late. So what were your thoughts on this trade? Let's look at the next slide, and we will see what you thought. So your thoughts are right here. You had a variance of 71%. What did you think? I scored you higher because I gave you half on the exit.
Okay, well, pretty much in agreement, John. My comments very quickly, and by the way, this analysis box is part of our process that we go through to make this a repeatable sort of thing. We're definitely not just winging it. We use this post-analysis sequence methodology in every one of our anatomies of a trade. So it gives us a way to see how we're doing. And the variance, what the variance actually means, we could actually have a losing trade with a very high variance because we followed all of our rules and we executed the trade according to our trading plan. So the variance doesn't necessarily mean you've made money or not. It tells us how well we've actually followed our trading plan and our rules. We also put some comments and some lessons in. So the comments I made were the trend lines were definitely money in this. I mean, look at how well the price respects starting all the way back in October of 2020, how well it respects this up channel. never comfortable with the intention for this trade for some reason. And you mentioned the lack of an add-on. First of all, it really didn't have a whole lot to do as far as the risk versus reward, but at any rate, and scaling back on approach to the supply line of the uptrend channel is the rule that we came up with. So there you go.
All right, fantastic. Well, thanks so much for that. Let's take a look at the Wyckoff Market Report. We've got this coming out on Wyckoff Analytics, and that is all the time we have for today. Thanks so much for watching. Professor Bruce, great to be with you today.
Thank you both, and we'll do more of this, very valuable. And thank you for being here. Take care, everybody. See you next week.
Thank
See
you,
you
Bruce.
on
Thank
your
you, John.
daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.